And then the closer look on the 15-minute time frame for Eurodollar. These are all the fair value gaps and bearish order block confluences. Rebalance back into here. And then this is the one I want to talk about. That's the only thing besides that and this that's noteworthy on the 15-minute time frame is we had a relative equal highs. Again, this is a 15-minute time frame. So we had buy stops resting above that. The market surges, runs those buy stops out, and then slants back lower. So we've taken out the low between the high and the higher high to the right. So this sets the stage for a bearish breaker. If this high would have been lower than this one, and we broke lower, then this would have been a mitigation block. Okay, that's the distinction. I got a question over the holidays, and I have a note in front of me. Could I please make it again a distinction between what is a mitigation block and what is a breaker? A breaker is a run on the stops in line with order flow. A mitigation block is a high with a low between it and a lower high than the previous high. So in other words, it's a reverse of this scenario here. It would be reversed. This high would be higher than this one. So it's not running off stops. It's just they sent it higher. Usually that occurs with a fair value gap or return back to the mean threshold of a bearish order block. And then it rolls over lower. And once it breaks the low in between, if it trades back to that, then it's a mitigation block. I will trade mitigation with adding to an existing trade. I do not like to use mitigation blocks as the inception of a new trade position. And the reason why I don't like to do that is because I prefer and I side on the breaker as a stronger pattern. Mitigation is a little bit uncertain, and I share in that opinion because I don't have enough love for the pattern to enter a new trade at a mitigation block. So I will all the time consider entering a new position at a breaker because you're getting at the beginning of the next strongest part of the move. So this particular down close candle here, that's what I'm highlighting with that little arrow here. That is the actual bearish ICT breaker. The market trades back up into it here. We leave it and then touch it one more time at the bottom. This is our London open. We have a measured move, the high to the low, and it projects down here. It overshot it about 3 or 4 pips, but just do the measurements on here, and you'll see we get that same measurement here. Really nice in terms of symmetry.